Welcome everyone to another edition Market Hunter Thursday with Hervé. You're live here with Hervé Francois. We go around the country talking to a different guest speaker from a different city, talking about real estate investing in their city, strategies, markets, financing. As you know, I like to go over the statistics about that city from the top. So San Diego, California, we're going 3,000 miles west. Let's kick it off. Population 1.43 million. Listen, I just did that research this morning. I was surprised San Diego that big. If you guys haven't visited, absolutely beautiful city. Median income $80,000, median rent just under $1,700. Headquarters of some big time companies with very big familiar brand names: Qualcomm, Petco, Jack in the Box, Sempra Energy, Scripps Healthcare. So a little bit of diversification of all kind of industries. Mr. David Acosta, without further ado, let's get started. David, welcome to the show. Good morning, my man.
What's going on, my man? Hervé, thanks for having me on, man. I feel like we're long overdue.
Yes, we are overdue, and that's my fault. I apologize.
I'm an early riser. I've kind of been waiting in the wings over here, letting you do your East Coast tour. I saw you were kind of dipping into like the Sun Belt, the Southwest, but
yes,
you and I work together pretty frequently, man. So I'm glad that I have been honored with your presence and get to pop on here on Market Hunter Thursday, man. I love checking these things out. They're so insightful.
Let's get started, man. Let's just go into it. The city of San Diego, right? Everyone has their pros and cons, plus and minuses. But San Diego, I have to imagine, with home values of almost $600,000, unless my statistics is wrong,
Yeah.
I gotta imagine it has to be a very attractive market for renters, because not a lot of people got $600,000.
Right.
So what's it like out there?
At the end of the day, it's expensive to buy a home in San
Yes.
Diego, coming in at 600,000. But not only is it expensive, but it's extremely, extremely competitive. So, like right now in the States, like a single family home, you could say, hey, your average list price might be 600,000, but if you're planning on financing it, like don't even plan on moving forward. These are all cash buyers.
No.
So what it does, it
Wow.
does is it creates a very, very high demand on rentals. So
Okay.
like rental rates for, I would say for San Diego, they're coming in right about like 2,400 per month, which
Got
is still pretty high, but it's a little bit more affordable than one, kind of finding the property and getting into the first property should you choose to buy.
Right.
So yeah, that pricing, like for a single family home, I think is one of the things that kind of props up the multifamily investing kind of like sphere of it.
David, explain to us, what do you think is driving property prices so tight? There's got to be some macro reasons in that, we all know about shortages of homes across the country and everything,
Sure.
got low inventory, perhaps some micro reasons that you could shed some light for us as well.
Yeah, definitely. I mean, from like a geographic perspective, when you look at San Diego, of course, you're thinking, okay, you're right on the coast. It's beautiful. So everybody's coming there.
Mhm.
A lot of like net in migration, like just people moving across the country, your snowbirds like yourself.
Yeah, yes.
But when you look at San Diego on a map, I don't think what people realize is that, of course, you're down here in the Southwest and you're bordered by the Pacific Ocean. But just to the south of you is Mexico.
Right.
To the right of you, you have a mountain line. And then to the north of you, you have Camp Pendleton. So it really just constrains, the overall ability to build and
Right.
creates just kind of like that supply and demand fundamentals that you do seek. Like
Right.
in Lexington, I feel like that's where you guys have found great value, is that with Lexington, you
Yep.
can't build outside of that
So
city.
true.
So
So
you
true.
get those supply and demand constraints. San Diego, similar fashion.
Right.
When you're thinking of it, you're like, oh, there's probably like not much to it, but you can get a real competitive advantage if you can identify those cities that have like, hey, a country to the south, a military base to the north. You got the ocean here and the mountains here. It just really creates like a bubble. And that's what has the home prices kind of going through the roof, is just the low supply there. There's really no more geographical areas to build.
By the way, folks, if you're watching this on YouTube, please smash that subscribe button at the bottom of the page for the DeRose Group Market Hunter. Absolutely. So when we talk about strategies, with that as the backdrop, so when you think about it like that, what kind of real estate strategies does that benefit the most? I got to imagine it's got to be difficult for flippers, but at the same time, there's got to be some opportunities for, if not the duplexes and the triplexes of the world, maybe some multifamilies.
I think that's exactly what it is. Like with every submarket, like every region, it's real estate investing, but the game's a little different. You know,
Right.
in the Southeast, it might be more of like a cash on cash return play. In
Yep.
San Diego, it's a different game. It's truly value add driven. When
Mm,
you're going out and you're acquiring these assets, average cap rate for a property is like between like 4.5 to 4.8. There are a lot of C class transactions last year, so that kind of got propped up a little bit. But
right.
what you're finding is you're getting into these deals and they're barely cash flowing. Like if that was your focus, I would say as an investor, that might not be a great market for you. But what you're finding on the back end, if you can increase value, if you can get into some properties, drive the rents, add on more units, things of that nature, your overall returns on the back end, that's where you're going to see just like a huge windfall. So the nature of the game is, hey, get into these properties. You know, they're going to be a lower cap rate. They're going to be a higher price if you're looking from like a 2 to 4 unit perspective. But if you can get in, you can modify it, you can raise the rents, or you can add an existing or another unit to the property. Like that's where you're going to see like the most bang for your buck when you go to refinance or you go to flip or sell the property. One of the things that's helping out a lot of investors are the city of San Diego has allowed you to construct an ADU. That stands for it's a accessory dwelling unit. So you can take a plot of land that is deeded for single family use,
Right.
and they'll allow you to go through with pretty like limited permitting and add another unit to that property. It's usually going on top of the garage, or the garage is usually being converted. But
Right.
now what you have is a $600,000 home that normally wouldn't cash flow. And now you have the ability to add a second or third unit to it. And now you're in business. Now it works. So you have to
Gotcha.
be creative. You know, you have to
Got
look
it.
for the value. Yep.
So what you said something earlier in regards to a lot of these homes are barely cash flowing. Is that just the math?
It's going to be the purchase price. Like that's like your main leader there. Just you
Okay.
know the amount of debt that's being serviced, and then it's the taxes too. You know taxes aren't so great out here in
Yeah.
California.
No, no,
You
neither
may
does
have heard
neither
that.
does
So
California,
yeah.
unfortunately.
So yeah, that's primarily what makes it challenging. But
Got
on
it.
the other side of that, what you get is like you can't bank on this,
Right.
but from a residential perspective, appreciation's through the roof, you
Right.
know? So
Right.
in terms of building your net worth and your equity that way, I think that's a good strategy. And then maybe you tap into that equity and you put it into a syndication or you put it into a cash flowing property in the Midwest. I think
Mhm.
that's a good play.
That ADU that
Yes.
they implement, is that across the city? Is that just certain pockets within San Diego that they're allowing that?
Yeah, so I think it's statewide for California. They originally said that you can only convert like something on your property that really isn't attached. So like a garage or something of that nature that's detached. They would
Right.
let you go in and take your garage level and build on top of that. Now what they're allowing you to do is convert what's called a junior ADU. And so that's something that can be attached to your house, like an attached garage. And
Mhm.
you have to go in there and make like an efficiency or a studio unit, which really
Mhm.
isn't too hard.
Right.
And then just provide them a separate access to get into the their space of the home. And now, due to the housing demand, there's a lot of people there who need a place to live.
Mhm.
They're allowing homeowners to go in and like, okay, we're going to give you a little bit more wiggle room. Like now you can do the garage level, or you can do a garage that's attached to the house. So it gives you more room to work with.
If I'm pursuing that strategy as a real estate investor out there, I have to
Sure.
think about these things in the manner that I'm going out to purchase. Like, all right, I got to purchase this property that may not have a garage, may have
Hmm.
space for one. I'm not going to put a
Yes.
garage, I'm going to put a studio or an efficiency unit. So I got to imagine there's a lot of competition for those type of homes that have room for an addition to be added.
No, absolutely. And I think that's what you're seeing in the marketplace. You're seeing homes that are trading for much higher than market value
Got it.
because of the land that they sit on.
Yeah.
And mainly what you're seeing is an investor's coming in and saying, hey, I see this house. Everyone else is viewing it as a consumer. They're like, hey, I want to buy this. I want to live in this area. It's a nice
Right,
neighborhood. And
right.
investors coming in and saying, hey, this is a really rundown 3-2. I know everyone else is going to pay 600,000 for it. I'll come in with cash, some hard money, what have you. I'll acquire the property. But what I've identified is that the lot is very large for just a single family dwelling. And I have the room to add 2 more units via an ADU in the back, or I
Mm,
can take the garage and I can convert that. So it's the investors who have the savvy where they can look at the MLS or properties that are coming to market and identify where is the real value. But it's also the investors that have a team, because you have to act pretty quickly. I
yeah.
would say if you listed a home on Thursday, it's going to be in escrow on Monday.
Wow.
So when you see a property go live, you need to have a team in place where I can call my engineer, have them meet me at the property, assess the situation, see, a rough estimate of what can be done, like what the costs look like, to actually take down the property and convert it. And then
Right.
does that make sense for you as an investor? So you got to have that team. And then you got to have the vision to just like not look at this specific product, but like what kind of land does it sit on? Where's the value? You got to be creative at the end of the day.
You got to be creative. There's no doubt about it, man. And thanks for that insight. Does it create a market for a lot of flipping?
If you're a flipper, highly, highly competitive market just because the spreads are so large. If you're a flipper, it's kind of uncommon, like I would say in the US, that you have to pay $550,000, in cash to close on a property in 12 days. I
Right.
think there's more risk associated with it there. But I think if you have your systems dialed in, you really know your submarkets and your markets, I
Right.
think you can make a lot of money if you can kind of get over that higher barrier to entry.
Let's go ahead and shift to markets. One of the things that we like to
Yeah.
discuss, even though San Diego is front and center, it's got to imagine there's some nice sprinkle of some secondary, maybe even some tertiary cities around San Diego where, okay, folks, again, might not be able to afford that $600,000 home. So they're going to
Yes.
the outskirts, right? They're going 20, 30 minutes out away from work, perhaps as nice, or maybe not as nice, but definitely for a heck of a lot less.
I think that's what you're finding. So like just north of San Diego is Oceanside. Yeah, traveling up there, still like a great area to live. It's right below that barrier of Camp Pendleton, but an area in the past where you would think, oh, this place is a little rougher. You're finding investors seeking yield there. Ocean Beach or Imperial Beach, a little bit further south,
Mhm.
in the past has had a more like transient population, even though it is coastal. But what you're finding is people are recognizing that the hot spots, it's really like they're in like a state of hyper supply. There's nowhere else to go. So
Right.
people are starting to bleed outside of those primary like submarkets is what I would call them. So they're going like a little further south down to Imperial Beach where it's like, oh, like, not my first choice, but you can recognize that 10 years from now, like that's going to see a lot of gentrification. There's going to
Mm.
be increased rent growth, and then the supply demand factors are going to kind of work their thing in the background, and you'll get that appreciation if you're looking to hold. And if I was going like maybe like southeast, like the El Cajones, Chula Vistas of the world,
Mhm.
where it's more of like a C class product and demographic, but I think that's where you're seeing people gravitate towards. And if you look at like job creation and industry, you're also seeing like big companies buy huge industrial parks out there. So you can kind of read the tea leaves and see, like, you know what, I think there's going to be some job creation out in those areas as well. So
Right.
I want to ride that, if I'm an
Right.
investor, I want to get in front of it and buy like in those areas and kind of ride that appreciation. So.
Got it. If I'm gonna ride that wave, what do you think is the best way to get into I don't know, a duplex or a fourplex or something, or even something
Oh
bigger?
yeah. If you're coming in and you're buying apartment complexes in San Diego,
Right.
usually, you're some kind of life insurance company or hedge fund,
Right.
and you're looking for a safe place to just park your money, and you're okay with a 2% or 3% return.
Right.
It's a safe vehicle. But if you're a smaller investor or you're just getting started, I love that 2 to 4 unit space. I
Mhm.
say get residential financing, get a 30-year fixed rate. Like the debt right now is so attractive,
Mm.
it's so
Yeah.
cheap. I
Right.
would lock up as much debt as possible in that 2 to 4 unit space. I
Right.
would get in there and perform what's called a house hack. So I
Yep.
would buy something that needs some upgrades. I would live in one of the units. I would renovate that unit, and then I would move right next door to the other unit,
Right.
put someone in place here, raise the rents. Same process, renovate, put someone else in place, raise the rents, refinance your money out, and then move on. I
Got
think that's a really good strategy because you can buy those properties with, an FHA first time home buyer loan.
Sure.
you
Sure.
know? So very low money down.
Got
30
it.
years fixed interest. I think it's a really safe bet. And then you're going to build a ton of equity too. And then you can
Right.
pull that out and put it in the southeast, you know, you can put it
Yeah.
somewhere else where you get more yield.
No, that's a real interesting strategy. Has there been a lot of construction, new build, going on
Yeah.
in San Diego right now to kind of address the shortage of housing out there?
There has been, I think we're scheduled for about 4,000 new units right
Mm.
around there to come to, I guess, to be completed in 2021. 4,000 is a lot, but I think it's like a 1.5% increase in inventory. So
Right,
while they're building, there's still a demand because you still have people who are moving to the area. So it's almost like, becoming net neutral.
right,
The people who are moving to the area, they're high wage earners too. It's just like the rental rate is still increasing because
right.
they're building, there's the people to meet that demand, and the people who are moving here are still making a lot of money.
So you're not concerned about a supply demand imbalance?
I would say overall, like, not concerned with oversupply. One of the things they consider too is like jobs in general.
Sure.
For San Diego, I think we lost about like 100 like to 105, employment positions due to COVID-19.
Right.
We've already gotten back about one third of those jobs on the books.
That's
And I
great.
think for 2021, we're scheduled to create about 35,000 more jobs.
Mm,
So there's still, like, at least from a data perspective, you can see like there's 35,000 new opportunities, potentially people moving to the area that can help offset that like 4,000 worth of units that are being built. That's one of my worries about like new construction or developing like, an A class space or maybe a high end flip, is that you could get caught when the market does shift with the product that you can't fill. You have to be careful. There's always risk there, but like currently where the market sits, I think there's a demand for it.
right. Out there in Camp Pendleton, do you see a lot of our servicemen and servicewomen getting involved in real estate once they're finished with their service? Are they staying there? Are they moving out? What's the housing like for them out there?
Yeah, I mean, it's interesting with like Camp Pendleton or like Fort Bragg or really anyone who's in the military, you get access to a VA loan.
Yep,
So I think it's one of the best products out there for getting involved in real estate investing. So you
absolutely.
have investors who like will say like, you know what, like I want to start forecasting my future. And I think maybe once I'm out of the military, I want to gravitate toward this space.
Right.
So they're acting now. They're getting in with zero money down with a government backed loan, which is
Sure.
really, really attractive. So they're actually, there's a good like military presence of real estate investors in the San Diego market. And typically what they'll do, Hervé, is they'll buy a property that needs some fixing up. They'll get in there, they'll do the renovations. And then after about seasoning it for about a year and a half, they'll refinance that note into like a conventional loan. Then that gives them their VA eligibility back. They'll use that VA loan to go with zero money down on a new primary residence. And
Oh,
then same thing, they season that property and they rinse and they repeat. So
right.
I think it really just comes down to with like
Yeah.
how creative can you get? Like,
Right.
how much are you educating yourself on like what's possible?
Right.
But yeah, for our military folks out there, that's definitely a strong possibility.
Are there a lot of local based San Diego investors, folks coming in from the outside? Because if they might be interested in an appreciation type play.
Yeah, I mean, honestly, I see it like primarily like as local individuals
Okay.
being like, hey, it's a different kind of game out here, but let
Sure.
me kind of like figure out the cheat codes. Like,
Right.
how can I make this work for myself? And then
Right.
outside of that type of investors, it's really larger REITs, hedge funds coming into the
Mm,
market and just looking for like a safe place to park their money
right.
while also adding some value.
Gotcha.
So that's kind of what you're seeing.
Awesome. Awesome. Hey, listen, Dave,
Yeah.
man, this has been great. What can we do to help you out achieve your goals for 2021? All of our subscribers listening.
Oh man, well, I'm always looking for a deal, man.
There we go. There we go.
Yeah, so if anyone's got any deals in the Southern California area, let me know.
All
For
right.
myself, I also invest out of state, so just looking to like network with other individuals and find some other pockets that make sense. So yeah, reach out. I'd love to connect.
All right, everybody. How about that, man? Our boy David Acosta with Acosta Capital also does some work with us over there at the Rosa Group, but all the way out in San Diego, talking to you about what it takes to be successful in investing in an appreciation market. A lot of times we talk about cash flow markets, which is great. You know that we love cash flows, but doesn't mean that you need to ignore or put appreciation plays in the back burner. If you can do it right with the right people, with the right systems in place, seems like it could be real success. What I took away from it is partner up with some good people, with some local folks, and think about not only the house that you're purchasing, but that plot of land where there could be an opportunity to add that additional bedroom, a second bedroom, another bathroom. That's where you're going to get the most value in your real estate investing in San Diego. Folks, thanks so much. I wish you a safe and profitable week. Can't wait to see you next week. Until then, be well, and we'll talk to you soon. Take care.